Today, we sit down with Curtis Grimes, who is one of the co founders of the Grimes Group, along with his wife. And he is down in Florida in the Orlando market, one of the travel destinations in the world. And he talks about the market itself and why it's such a tourist attraction for individuals, how you can get involved if you're looking to invest in the Orlando market, but also some of the challenges that he faced moving from New York down to Orlando, particularly when it comes to navigating downfalls in the market. So if you're looking to be a better investor, navigate different situations, and invest in tourist destinations, check out our conversation right here on Multifamily Insights. Curtis Grimes is a real estate professional with over 20 years of experience as an investor. He's a licensed realtor in the state of Florida, along with being a certified general contractor, certified home inspector, and a certified elevator inspector. He is here to share how he can help other investors buy, sell, and invest in real estate. Let's welcome to the show, Curtis Grimes.
Hey, good afternoon. Good afternoon, John. How you doing, man? Nice,
I'm
nice to
excellent.
nice to finally meet you.
Yeah, man, I'm excellent. I'm doing well. Curtis, I went over your bio at a very, very high level. Why don't you take 2 minutes and fill in some of those gaps?
Well, I'm a kid that grew up in Queensbridge projects in New York City. Uh, moved to Florida in early 2000s. And right after, pretty much a little after 9/11, I was working down. I used to be an elevator installer in New York. I owned a construction company, and after owning the construction company, like I said, we moved down to Florida. My wife and I got into real estate, and and history is still being made.
I love it, man. So you were inspecting elevators in New York,
I used to
working,
install them.
used to install
I
them
used,
as well. Okay.
yeah,
So you
I
had a
used to
lot of
install them in New York.
yeah, so you got a lot of knowledge from that space. You moved to Florida and really started investing. What was it about the move that sparked you to start investing?
Well, we were investing really before we came to Florida.
Okay.
That's what gave us the financial ability to just really kind of just up and move. We had purchased a four family in New Rochelle when we got married back in '99, and after we purchased that four family, we ended up buying two more duplexes, or really like a triplex, because in New York, you got basements. So, and the ones that we bought were able to rent out the basements. So it was basically, three streams of income from each of those properties. So
Got it. So it makes
yeah.
sense. So you moved to Florida, and what happens next on your journey?
Well, I mean, got here. I was at that point when I moved here. My wife was already in real estate. She was the first one to become a realtor. So, like I said, I was into elevators and construction, had the construction company. When I moved to Florida, I got my GC license because it was booming in 2006, 2007.
Mhm.
Things were kind of booming at that moment. And then the next thing you know, we had a financial collapse. And I was part of that. So I got kind of caught up in that as well. I had to foreclose on a couple of properties, even had to foreclose on my regular home,
Mm.
and from after that, I purchased a home that somebody else was foreclosing on, that I moved in. So I mean, it's just a series of events, and it's a long game, you know. That's the real estate game is a long game. A lot of people look for these short wins. I look for the wins along the way. Just keep moving the chain, and we'll win the game.
So when you were going through that, right? You talked about you moved to Florida. It was hot, 2006, 2007. You get your GC license, right? Shortly thereafter is when things kind of turn. You end up having to lose some homes to foreclosure, even your personal residence. But then you actually acquired another property that was also in foreclosure. What was it that gave you kind of the wherewithal to continue investing, buying homes, even down through this downturn?
Well, because I knew the possibility of coming back from it. I'd already attained, a lot in the beginning. Like I said, moving from New York, I'd already bought two or three properties, and had rental income coming in. So I did have some income, but like I said, 2008 happened. We had the property in New York. Uh, in, it was just like a theory, like a domino effect. Um, we lost each one of our tenants. One of our tenants that was with us for about 19 years at that time lost her husband, so she couldn't pay her rent. Then one of my other tenants, he lost his job. That's when people were losing their jobs and everything else. And it kind of struck us really hard during that time. I think that was, like I said, around 2008, and I just couldn't carry the load of covering 3 mortgages at that time. Because I had the mortgage in Florida, I had 2 mortgages in New York. Um, so, but being able to sustain that and just downsize and just kind of uh, consolidating, you consolidate and build. I mean, it was a tough time, though. I can tell you, I can look back at it now and laugh at it, but when you were going through it, it wasn't fun.
If you had someone who was going through a similar situation today, right? Market was booming, now not so much. In a lot of cases, there are investors who are, like you said, they're struggling right now. What advice would you give them to navigate the current situation?
Continue to make sure that you keep some capital aside. Always don't overextend yourself. That was one of the things that I feel that it probably happened at that time was a little bit of an overextension. And it's about leverage, being able to leverage your portfolio. If you have to downsize one to carry the other one, then so be it. You know, Sometimes you got to take a little bit of a loss to,
Mm,
it may seem like a setback, but it's a setup to get you into place to where you want to be.
I love it.
That's what I would say.
Curtis, talking about kind of where you're at today, portfolio, the work you do, talk to me about all that.
Well, like I said, my wife and I, we're a team in the Grimes group. She usually works on listings. I usually work with buyers. The market's a little bit slower right now, but honestly, the slowness of the market really won't impact us because of the leverage. And that's what I was saying. I stacked up my financial portfolio to make sure that I could withstand, if God forbid I didn't sell one house this year, I'd still be able to pay the bills.
So I know a lot of real estate agents over the last, 5 or so years who are crushing it, doing really well when the market was booming. And then when things
Mhm.
slow down, it's just a different environment. Um, what advice would you have for those agents to make sure that they're not in this kind of feast or famine environment based on the current market dynamics?
Continue to always lead generate. I mean, lead generation is the heart of this business. I mean, having that um having that pool of clients that you can go to. Uh I mean, it may not come today, but at least it'll be 6 months down the line. But in having that 6 month residual, I mean, I always tell people, when you come in this business, to always try to make sure that you have at least it scares me when I hear people, oh, I'm gonna quit my job and I'm gonna become a real estate agent. It's kind of a scary thing because I'm like, look, I mean, it can be done. You may be blessed and get $1 million listing on your first one out. And but if you don't manage that money, it's all about managing your money, to be honest. I would say the biggest thing is to manage your money, run your business like a business. And I believe that's what a lot of agents don't do. They don't know that this is a business. It's not a job. It is a business, and you have to run it like a business. So
Elaborate on
educate
that point more.
I would say educate yourself on, keeping, P&L, your profit and loss statement. And, you say P&L to some people and then they like you're talking Chinese to them. They don't know what that is. So just knowing where you are, like I said, and managing your finances, knowing your numbers, knowing how much it's going to take, what's your overhead every month, what does it cost you to keep the doors open, and how long can you keep your doors open before you're in dire need of you know the next closing. So that's why I said, I mean, not to seem uh um uh you know I don't even know the term, but like I was saying, if I didn't sell one house this year,
Yeah.
the doors of my business would still be open.
Yeah.
But that, that would be highly unlikely because if you're doing business, you're going to do some business.
Right.
I may not reach the numbers. I may not have the 54 sales that I wanted like I do every year. I may get 40, may get 40 sales this year, but 40 sales will keep the business floated and you keep that money aside and that'll keep you open for next year. And it just, you keep pushing it down the road.
Yeah, what I'm hearing you say, Curtis, is like it's a couple things, right? Most agents they kind of let things happen. They treat it as okay, I'm gonna do this, I'm gonna try this, I'm gonna see what happens, I'm gonna do some activity, but maybe they're not measuring it. They're not running it like a business. They don't have a clear
Hmm.
strategy. They don't have clear metrics in place to measure what's effective, what's not working, and having the adjustments that's needed to make. And I see that with a lot of investors as well. They want to
Hmm.
invest, they want to buy, 20 doors, 100 doors, whatever the number is, but they don't have the kind of the KPIs in place. And then on the flip side of that, it's the what if you don't hit it, right? Like, are you just done? Do you have to shutter or do you still operate your business and then recognize, hey, there are things we can control and there are things that we
Hmm.
can't control. What do we need to adjust to put ourselves in a better position to actually achieve those goals? And that's something that I think a lot of people struggle with when they come into real estate is that they don't treat it as a business, as you said. They treat it
Hmm.
as a different sector, right? It's real estate. It's the business.
Absolutely.
Whether you're a real estate agent, you're a real estate investor, like you're a property manager, it's still a business. It's just a different
Hmm.
product. It's a different, set of structure there, but it's still a business. And I think too many people don't think of it that way. They don't think about marketing. They don't think about operations. They don't think about HR. They don't think about finance, and they just treat it as there's an income number, there's an expense number, and then whatever's left is my profit. But again, like
Yeah,
any other
and then they
business,
forget
there's a lot
about the
more
tax
involved.
man too.
Yeah,
And
definitely.
you get a lot. I know some agents, man, that they do well. May sell 20, 30 homes and making $400,000 a year or something like that. And the next, but they're spending $500,000 a year. And if you're making four and spending five, you're not
Yeah.
gonna be able to make it too long. Yeah, I know a lot of agents. They get into business. The first thing they do, they go out and they buy a Porsche, and they close on a big deal, and you drive in the Porsche, not to know that the maintenance on that thing is 200 and something dollars a month. You know, you go for an oil change. The oil change costs you $500. So it's about really knowing your numbers. Knowing what it's going to take to sustain whatever it is that you're looking to do.
Curtis, you help a lot of buyers in the market, primarily parts of Florida. Um, you work with both home buyers, investors,
Combination, a combination.
combination. All right, so we don't
Mhm.
deal as much with the residential side, but I do want to talk about the investors. What like what are investors looking for today, and how has that shifted, if at all, over the last couple of years?
Well, especially here in Florida, I mean, the biggest thing was Airbnb rentals, vacation rentals, because I mean, I'm here in Orlando, the home of the mouse, the big mouse house. So everybody wants to be close to that and, close to the parks and attractions and things to that effect. So, and I mean, kind of the vacation capital of the US is here in Orlando. So that's one of the great things about being here. And vacation rentals do very well. I know that we had a little bit of a slowdown after COVID because, certain people were, our Chinese buyers and stuff like that were not able to be in the market at that time because they couldn't get here. So that kind of slowed the market down a little bit as well. But I'll tell you, even throughout COVID, I mean, sales was, I think that was probably close to one of our best years was 2021, 2022. We did really well during those years. So, and that's the other thing. Like I said, take the good with the bad, and make sure that be like the squirrel and store up your nuts because you don't know when the market's going to maybe take a little bit of a dip on you. And right now we're kind of in a little bit of a dip, but it's nothing to fear because rentals are getting kind of leveled out as well. So if you look at the rental market, it's leveling out. Home prices have leveled out. And they're pretty much right where it's supposed to be. The only thing right now is taxes are pretty high. Matter of fact, I just paid the taxes on my house today, and I was like, "Holy crap!" Because I missed out on saving 1% by not paying it last month. So make sure you know you get a little. Make sure you get those discounts. I'll tell people that. That's a little word of advice. And take it from me because I paid an extra $60 today that I didn't have to pay if I'd have paid my taxes last month. So
Yeah, yeah. There you go. And Curtis, it's interesting too because like you talked about things stabilizing in the market, and Florida,
mhm,
those, I mean, as a state, but in particular, the Orlando MSA where you're at, that was one of the markets that had a lot of supply come online over the last couple of years, particularly in multifamily. I'm assuming in the residential space as well. But it sounds
mhm.
like that's starting to stabilize a little bit more. As you kind of look at the market and kind of talk about that stabilization, where do you kind of see things as you kind of move forward over the next, say, 6 to 12 months?
um, well, there's not a lot of multifamily. I don't deal with a lot of multifamilies here. I deal with a lot of single families. When I was up north, though, I mean, like you know, again, I was on the investor side of it. So we had, like I said, I had a four family in New Rochelle, and
Mhm.
mostly it was four family units. You could find that here. Here in Florida, you don't really find those multi or even duplexes. I mean, it's kind of far and in between to find multifamily homes here. You'll find duplexes, yeah, maybe here a triplex or something like that, but not any, multi-unit uh availability um along those lines. So, but as far as the market stabilizing, I see where, like I said, home price the rent prices have really kind of stabilized. They're not going up anymore. But they're still pretty high. I mean, if you ask me, um the 18, $1,900 for a one bedroom, that's pretty steep with the cost of living here in the Orlando area. I don't know how some people do it, but they do, and that's why I try to get them into a home. Home ownership is definitely is to me has always been the best way for any person to build their wealth. And that's one of the things that I'm always looking to do is to help people build wealth because I know how important it is to be able to have that financial stability. Financial stability can kind of, you know, take away some of the depression and everything else that people have to deal with, the everyday stresses of life, and just give you that little bit of security. And that's what a lot of people are looking for is that people just want security
Curtis,
to
you
know that they
mentioned, yeah, you mentioned having a lot of investors who, one, they're looking for security, but also investors who are coming down. They want to be in Orlando. They want to be in a vacation rental spot. I presume this is either an investment property or a second home for many of the clients that you work with. What's something that they need to know before investing in that market?
Um, in certain communities, I would say the make sure you're in a prime area. I mean, location is key. And knowing the vacancy rates of the properties of where you're going to be at. I have honestly, I don't deal with it that much, but I do have a guy that I send people to that that runs a management company for like vacation rentals and things to that effect. Just looking and making sure it's got a nice ROI on it. That I'm a numbers guy. I just need to, as long as the numbers work for me, it works. It was like when I sent my son to college. My son graduated from USF, and when he was going to school, we looked up, what it was going to cost for him to stay in the dorms. And I was like, the dorm fee, the meal package, and all of that. And I said, man, listen, I can buy a place around here. So what I did, I bought a condo not far from USF. My son lived there, got a roommate. His roommate basically ended up paying my mortgage. Well, really, I didn't have a mortgage. I bought the place cash. But and it's helping me now because now my son has moved out, he's graduated, and I got two other tenants in there. I got other tenants in there now paying the bills, and I got an income producing from that property. So at the end of the day, it didn't cost me anything as far as his dorm fees because that was the initial purpose of that property. So so just being able to do something like that is a game changer.
Curtis, I appreciate you sharing that story. What I want to elevate is when you're investing, obviously it comes down to the numbers, but also understand the use of the asset.
Mhm,
We typically focus on just larger multifamily deals, so it's pretty straightforward, right? You're buying an apartment community for the rental purposes, but when you're buying a house or smaller properties, there could be a number of uses, right? So you could do
mhm,
Airbnb, as we kind of talked about. It could be a second home. It could be a kind of vacation rental.
mhm.
Could be a hybrid. You mentioned, that condo where you bought it for your son to live in while he was in school, but you then kind of converted to more of a pure rental after the fact. And I think it's really important because, again, a lot of times you have accidental landlords, folks who fall into this space, not because they wanted to be a landlord, but they had a house, they had to move for work or some other reason and
Mhm.
couldn't sell the house or didn't want to sell the house and just decided to rent it out. But they didn't really start with the intention of having that home become a rental property. For someone who is maybe in that world where they haven't sat and ran numbers, they don't maybe quite know how to do that portion of it, but they are looking to maybe convert a home into a rental. Is there any tips or advice you would give them to understand either valuation or what they need to do to take care of themselves in that process?
Man, it's when you ask it like that, I really have to put a lot more thought into it because it's just like, really it's kind of a no-brainer to me because I've been doing it for a while. It's like I knew what the outcome of it was gonna be, but it was like but like I said, I did the numbers, looked at the numbers saying, "Okay, well, it's costing me, $2,000 a month to put my son in college. So what would it cost me if I purchased a place, and I think at the time I bought the place for maybe 150 grand, and it's a 2-2. So it's like, hey, all right, it's a 2-2. I'll take this. And in 4 years, when he graduates, which he did, it really just fell down to the numbers. And it's not like I knew I was going to be a landlord. Um, and I knew that it was the capability of having, because there's going to be other college students. The college isn't planning on going there. USF ain't going anywhere. So there's gonna be other college students that need and wanna live outside of the campus and wanna live on their own. So, it's just the long game, thinking about the long game, what else could I do with this property? Um, if you can think it, it can be done. That's it, just kinda just putting your vision to paper and making it happen.
I love
I'm
it.
I'm
Yeah.
I'm telling you, I'm just a make it happen guy, man. I mean, you know, um, as far as I would have to sit down with somebody maybe and put together the steps that it took, but that step by step process.
But I'm hearing you say, one, you understood, what you wanted to get out of the property, right? You knew you had 4 years there. You knew that, hey, this could this is going to attract students based on I'm assuming its proximity is close to the university, right? So you
Hmm.
knew, hey, this is a good property for this reason. USF is kind of the attraction. That's going to drive people to the area. So you kind of check the boxes there. Did you do any due diligence just on the use? I know sometimes, especially when it comes to condos, like sometimes they'll have a limitation of how many renters can
Yes.
be in a condo. Can you talk a little bit more about that?
Yeah. Well, see, and that was the great thing about you, and that's a good topic, a good point that you bring up because um, the only reason I was able to put like I couldn't have bought the property and not put my son in there because you had to live in the property. So by him being my relative, it's like me living in the property. So I'm utilizing it. He's living there. He's staying there. And you have to stay in the property. So there were guidelines and stipulations that he had to live in it for 1 year before you could rent it out. So he lived in it for 4. So now I'm able to rent it out the property. So you couldn't rent it within that first year. So definitely keep in mind of some of the HOA guidelines or covenants within the community that you're buying in. So that's definitely one thing to keep in mind.
Yeah, it's a great point, Curtis. And I mean, to your point, when it comes to the HOAs, sometimes there's bylaws and ordinances that you're not thinking about, but they put those rules in place to protect the community because, the last thing
Hmm.
you want is someone bought this as their retirement home and you got a bunch of college kids that are just running rampant, right? Because everyone's just buying them and leasing them and renting them out to college kids. So
Exactly.
sometimes you have these provisions in place to protect yourself, protect the community. So you would definitely want to make sure you understand that. I know we bought an Air or we did a kind of a almost an Airbnb arbitrage, if you will, at a property in Jacksonville. And, I would say for me, it was some things went well, some things didn't work as well. But one of the things that we encountered was really just trying to understand the seasonality of travel and kind of the marketing side of, trying the hospitality world, trying to get guests to stay and understand pricing and the fluctuation and fluidity of that. When you talk about a market like Orlando, whether it be for hospitality travel or just, home ownership, do you face that a lot due to the nature of travel and just the seasonality of the city, or is it pretty steady as far as overall demand in the area?
Well, it's pretty. That's where I was saying. Orlando is definitely a great place because it's pretty steady. I mean, of course, you have your down season, and I mean, it's just like everywhere else. It's like, if you want to get people in your property, you're going to lower your price. You may be taking a little bit of a less, income on it, but at least it's not vacant, so you're getting something from it. So that makes up for those low times. So when the high times come, you're doing good. When one month, during, say, well, even now is, I think, a good time. December, January, during those months, you know, it may be a little bit cheaper. You may find the Airbnb for, you know, I can't remember the prices off the top of my head, but say it's $200 right now a night, and but in the high season, you have the peak season where you're getting $400 a night. So it kind of balances out, and you have to you know calculate those differences and to make sure that you cover your overhead costs, and at the end of the day, you're in the plus. you know.
Yep, I love it. Curtis, your background is, elevator installation, GC, all that. I know, your wife's background is more traditional real estate agent. How do you guys work together? Talk to me more about kind of that dynamic in Grimes Group.
Mm. We have separate offices. We have separate offices. That's what keeps it going. But, I mean, like I said, normally she'll work on the listing side and I work more with buyers because of, my background. And like I said, I'm a licensed home inspector as well. Of course, I can't double dip as far as it's a conflict of interest, me being a home inspector for one of my buyers or something like that. But at least I have the eye, I have that knowledge of knowing when something is wrong with the property. So I go in with a whole nother, view that most realtors don't have. Like I said, I've built homes from the ground up. So, there's not too many things that I don't know about a home when I walk inside one, you know.
I love it,
So
man.
that,
Great intel there.
yeah.
Yeah. Well, Curtis, good information, man. I appreciate you sharing a little bit more about kind of your journey coming from New York, moving down to Florida, what we see in the Orlando market, and just there's some seasonality to it, but it really just comes down to having a clear game plan. Treating it like a
Hmm.
business. What are you seeing at the property? What's your game plan? And running the property, running your investment accordingly. What's the best way for people to get in touch if they want to reach out to you?
Well, they can get in touch with us. We're on Facebook. We're on Instagram. I'm not big on TikTok. I said this year coming, I'm gonna, get on all of the social media platforms and kind of be out there. But I think Google reviews. If you look up our reviews, find us on Zillow or but really our sphere of influence has been the heart of our business. I mean, we got repeat clients, you know, tell a friend, it's like family members that are part clients. They'll go and tell their other family members the experience that they had with, with closing with us, and just that's really been the key to our business, is keeping that family atmosphere. I mean, like, our clients become family members. We stay in touch with them. We do events all year long. Right now, we got our pajama drive that we do every year. This is our 10th year doing the pajama drive, that we give pajamas to the homeless in Osceola County. So this is our 10th year doing that. It's just staying involved. But you asked, how do people get in touch with us? I mean, give me a call, 917-577-9590. Or you can email me, curtisgrimes at gmail. But like I said, there's a multi, we can be found. We're not hard to find.
There you go. Good
You
stuff
just,
there, Curtis.
yeah.
We'll put a link to that in the show notes so folks can reach out if they want to learn more. Right now, we're going to transition and go to our round of insights. When you think you found a great deal, asking the right questions could be the difference in finding a stud or a dud. Listen, we've put together a new guide to help you out. It's called 7 Questions You Must Ask Before Investing in Apartments. Now, in this guide, you're going to learn how to uncover red flags, quickly identify underwriting risk, vet sponsors and team members, and confirm key assumptions. Now, this is a guide that's going to help you be a better investor, whether you're an active investor or you're a passive investor looking to partner with other operators. Asking better questions is the key to identifying great opportunities. So download this free guide. Go to our website, casmoncapital.com/7 questions. That's the number 7 questions. And you can access this free guide today. To make it easy on you, though, we've put a link in our show notes. So you go to the show notes, you can click that link and access the guide right now. This guide's going to help you make better investment choices, asking the right questions to build your portfolio. So be sure to download it today. All right, Curtis, give me a failure or an apparent failure that set you up for later success.
Oh, 2008. 2008 was one of those things that definitely reshaped. I said I'll never be put in that situation again. I mean, really, it was a tough time going through it. I was robbing Peter to pay Paul almost at that time, and thankfully we were able to find. And I didn't even mention I ended up buying one of my properties back out of foreclosure, which is kind of like unheard of. I had a family member who had just came into a little bit of money, and I was like, look, dude, if you give me this, and having those type of relationships, to be able to borrow $200,000-$300,000 from somebody, that's not a small ask, and I was able to pay him back in a record amount of time with interest. So so being able to do that. But 2008 was definitely a catalyst to the mindset of resilience, of building up resilience in this market, and making sure that you have things in reserve. So I'll make sure that I'll never be in a position where I don't have enough in reserve to at least cover my overhead. So
give me a digital or mobile resource you recommend for our listeners.
Digital or mobile, I don't know exactly what you mean.
Like an app, just something that you've come across that you use in your day-to-day that you like, man, more people should be on this, or something that helps you analyze properties, anything like that.
Oh man, that's a unique question. I've never been faced with that one before. An app,
market data, resource, just any kind of resource. Market data. Where do you stay on top of information, industry news?
Just call the Grimes Group. We stay on top of it for you. You just give us a call. We'll give you all the data, everything that you need to know about the market. If you want market updates, we got that for you.
All right, there you go. Give me the book you've recommended or gifted the most in the last year.
Well, for real estate agents, Shift, the MREA. I'm a Keller Williams agent, so I've been kind of Kellerized, as they would say, because Gary Keller is phenomenal. Been in rooms with him and people like that. Just having that type of information and that type of influence is always the psychology of money
Yep.
is another great book. I mean, like the, there's not enough education. So always be looking to educate yourself. I would say, but as far as real estate agents, the MREA, that's definitely one. And if you're going through this market, there's another book that Gary Keller put out called Shift. So those are my two go tos. I'm looking at you got me looking around in my office here.
Well, you hit it, man. We got some good ones right there. So shift, they got to go to the library to find everything. So I know you got plenty, but shift is one we'll call
Yeah.
out right now. Hey, give me a daily habit that helps you stay focused on your goals.
Okay. Well, I need to get back in my routine. It's creating that routine, waking up early, exercising, which I don't do anymore. I need to get back into exercising. Um, but that's definitely a game changer. It helps you to set your day, starting the day with gratitude. That I do on a regular. My wife and I, we have a gratitude call that we do with agents at 7 a.m. every morning. Just quick, get on there and tell what you're grateful for the day. Because it's hard to start your day in gratitude and have a bad day. Even if certain things don't go the way that you plan, if you start the day with gratitude, what you're grateful for, that's a game changer right there. And then usually I get on, like, I listen to podcasts from 7:30. There's a guy named James Shaw that he does a call, and I get on his call normally. I haven't been on in a while. Like I said, I've been kind of kicked back a little bit. Just got a couple other things going on, but that's my routine. And then from 9 to 11, I'm usually on the phones making my phone calls and scheduling appointments. So that's normally how I end my day, and then just try to find some peace and relaxation. I'm a cigar guy, so my whiskey and cigar is my meditation time. So that's what I like to do.
I love it, Curtis. I love it. Well, listen, you're in Orlando. Last question here. Give us your favorite place to grab a bite to eat.
Favorite place? There's a place called Nona Blue. I don't have any favorites. I'll tell you, I'm a cheap date. You can take me to Chili's because I love the margaritas. That's it. So Chili's chips and salsa. I'll be there all day and watch
There
it.
you go. Simple enough, man. Curtis, good stuff, man. You talked about a few things, really just, again, the move from New York, starting off, building that portfolio. I think the takeaway for me is like, hey, if you're working that full-time job, you should always be looking to invest on the side. Just start building up your passive income, building up your portfolio, and make sure you don't over leverage, right? You can get, in some rough situations when you do that. But that's the lesson that I
Mhm.
think you learned along the way is making sure you don't over leverage. Always have some liquidity, some cash that you can kind of navigate and move around. And from there, pay attention to the market, pay attention to opportunities, and invest with the purpose, with the business plan in mind, like you did with the condo when your son was going to
Mhm.
school. There's going to be opportunities where you can make investments that are not just about the return on the investment itself, but also have a
Mhm.
greater purpose, whether it's a vacation home, whether it's a home for a relative, someone who's going to school, but figure out how you can use real estate to help you achieve your financial goals as well as serving the purpose as well. Again, for folks that want to reach out, check out the Grimes Group. We'll put your email address and all your contact info in the show notes. Curtis, thanks again for being a great guest and coming on Multifamily Insights. We look forward to
Thank
staying in
you.
touch with you, and I hope you have a great day.